Good evening, everyone. This is Rajendran here, joining from Market Calls, and welcome everyone to predicting the markets using market profile analysis. So this is a preview webinar of Option Hydra 2.0. So in this session, we're going to discuss about one of my favorite topic, like how we can use market profile, especially for systematic thinking, and what is the difference between systematic thinking and how, especially, or we can say like when, especially, we should use market profile for predicting the markets. Of course, I'm in my native place. I'm in the back end. There are a lot of firecrackers are going on, so you might be hearing some firecracker noises back and then here. Yeah. So of course, this is one of my favorite topic as well. So before getting into the session, just give me a quick confirmation about the audio and video quality so that we can kickstart with the session. Is the audio and video quality is good? All right, great. Thanks for the confirmation, guys. So, all right. So we are going to discuss about a couple of important topics. Last week, we had discussed about the basics of market profile, and some of the basic terminologies about market profile is what we had used here. But however, in today's session, it's completely different. We're going to look into some of the core concept, how we can design a context, like how we can understand the context, how we can understand what is happening using market profile, and how we can convert those thinking, right? How we can convert those thinking into an objective way of analysis using market profile, and then on top of that, how we can understand where market can go and why it should go. That is the kind of analysis we're going to discuss in the session. So a little bit about me. My name is Rajendran. I'm the founder of Market Calls and co-founder of Algo Mojo. I've been trading this market for more than 13 plus years now. Primarily, I trade in Nifty and Bank Nifty index futures and option markets, and I also traded in various segments like USD/INR and stock futures. I don't trade stock options much, but rarely here and there I trade stock options. But primarily, if I'm trading when I'm taking a directional call, I primarily would like to go with stock futures. When it comes to index markets, most of my positions are like hedged trades, or mostly spreads is what I would like to trade. And especially spreads in options are quite famous, especially if you're a spread trader, that too after the first July onwards, right? So the new margin regulations has been implemented, and that's been favoring the option traders as well, whoever having a hedged positions in the markets. And I had designed various trading systems, mostly directional trading systems, and I also automated a lot more trading platforms as well. We design, most of my specialization is in designing automated trading platforms. So in the past, I had developed trading platforms like Algo Studio, Algo Mojo. I mean, right now we've been bringing the Algo Mojo. So prior to that, I also designed tools like Algo Action and Algo Ninja kind of tools. Anyways, let's quickly get started with the session here. So in today's session, what we are going to discuss here is that how to predict the markets using failed auction. And there are concepts like stealth auction. What is a stealth auction and how we can understand stealth auction, and the weaker references, the importance of those weaker references. So basically, when I say predicting the markets, what comes to your mind? So let me put this question to you. What comes to your mind if I say like predicting the Nifty? Let's say Monday market, where it will go. That is the first thing it will come to your mind, right? Immediately. For some people, they want to predict what will be happening on Monday. Probably for some people, especially option traders, they want to know the range. Basically, they are most of the option traders, especially the matured option traders, who are having a hedging on the one side. So they want to know where the market is likely to move in a range. They want to predict in a different manner. Some people always want to know the direction for the next day only. Maybe some people, they want to know only from the intraday perspective. And most of the traders, they want to know whether Nifty will go to 15,000 or 16,000 or 20,000. But first thing you have to ask, if you are a trader, do you really interested in 15,000? Or do you really interested in what is happening, what is going to happen in the next 1 hour or so, or what is going likely to happen for the day, or what is likely to happen in the next 2-3 days? Then immediately, if you ask, what is your opinion? If you ask me, like, what do you say? Are you interested in Nifty going to 15,000, 20,000, or are you interested in Nifty going to, like, what is going to happen for the next day, or what is happening right now? The answer, if you ask to many of the traders, especially the traders who looking into various data sets, generally nobody is interested in knowing about what is happening right now. But let me tell you one thing: if you want to predict the markets, you should be strong enough to know what is happening right now. The right now information is more important than whether market is going to go 15,000 or 20,000. The market's going to 50,000 and 20,000 doesn't give you any meaningful insights about the markets or about the market players. It doesn't give you any information about the smart money. It doesn't give you any information about what dumb money is doing. Probably it doesn't give you any idea about what kind of traders we are dealing with. It doesn't give you any idea about where emotional traders are getting in. It doesn't give you any idea where the traders are getting into trap. And I can keep on going on and on and on, because people are not interested in those kinds of things. People really interested in where I should buy, where I should put a stop loss, and where I should keep my targets. They're not really bothered about why it should move, right? So very few people are concerned about that. Why I am talking here is that if you want to predict what is going to happen in the next, imagine that you want to predict what is going to happen in the next 1 hour, how you can predict it? Maybe the answer is like, not every time it is possible, but yes, sometimes it is possible. That is the question. That is the answer you will be able to get from most of the matured experts as well. Even matured experts, they think, even I'm thinking that predicting the markets is not going to be on a daily basis. Can I predict the markets? Of course not. But there are predictable patterns which occurs on a daily basis, which gives you a low risk, high reward kind of trade setups. Here and there, such kind of trade setups keeps on happening. So now the real question is that, can I really predict the markets every time? Or only when the pattern happens, you have to wait and you have to predict? So probably I would say, like, you should go for the option B, where predicting the markets every now and then or every half an hour, it is not possible successfully. But whenever you're seeing a patterns, some of the patterns are high probability patterns. Those kind of patterns are occurring, and you're able to understand what is happening inside the market context. You're able to decode the markets. That is where you will able to play. That is where you have the predictive ability, right? So in a nutshell, you don't have the predictive ability, not all the time, but very few places here and there. Definitely market will never fail to show up such kind of trading opportunities where low risk, high reward kind of trade setups. So basically, if you want to predict the markets, you have to wait patiently. But that is largely missing among most of the young traders these days, right? So young traders, they want to jump into the trades. The market starts, the bell is ringing, 9:15 is there. They're 9:15, 25, within first 10 or 20 seconds, they will be placing their first trade. They are mostly emotionally driven. Their trading decisions are driven emotionally. They want to scan some 5 stocks or 10 stocks for the day, and immediately they want to jump into the trade. So basically, they don't want to understand, are they placing the trades properly or not? Or is this a good time to place the trade or not? Or the setup is happening or not? Whether the setup is happening or not, day is over, they will go and see some scanners. They will try to scan some so-and-so trading logic, and then they straight away, Monday market open, they want to find some trades. If you are from that perspective, right? If you are thinking from that perspective, right, you are going to be taking trading decisions mostly from an emotional trading point of view. And you may feel it like out of 10 times, maybe 2 times, yes, it could be worked in your favor. But most of the times, it goes against your favor than it worked in the favor of you. So what is the core skill required, especially if you want to trade market profile, is that to be a patient trader. Sometimes you may have to wait for your first trade around 11 o'clock. Sometimes you may have to wait till 1 o'clock. Even if you're a trader, even if you're an intraday trader, at times you may have to wait for your best trade even till 2:30 also. Now ask this question yourself. If you are an intraday trader, do you have the patience to wait till 2:30 p.m. and trying to take a trade? So for something like gold or crude, you're watching the markets right from the morning, and maybe you don't know when the best trade is going to happen, and the best trade is happening around evening 8 o'clock. Do you have the patience to sit and trade and wait for the opportunity to set up? Let me tell you one thing. Whenever you want to spot a trading opportunity, the best of the best opportunity comes only at one single point where most of the traders are going wrong. And yes, very few places when smart money is driving, you're able to spot that. But most of the times, you need to know what dumb money is trying to do. When dumb money is getting more and more emotional, according to you, what are the chances that they can go wrong? Can you put it in percentage terms? I just want to hear it from you from the percentage terms. So there is a Q&A box is there. There you can go and comment your answer. How much percentage do you think when dumb money behavior is happening, what are the chances are there that markets can completely go against you? In percentage terms, probably out of 0 to 100%. Of course, so Vimal is saying 90%. Arun Kumar Kare is saying 35%. And Vinod Muraka 90%. And Ashish Mukherjee is saying 90%. Pushkaraj Kanitkar 30 to 70%. And Saravanan is saying 10%. Himavat is saying 40%. Aditya Suravanshi is saying 80. And Chirag is saying 85. Narendra is 95. And Vinayak is 90. And Nagaraj is more of playing 50-50 kind of game. And Raghavendra is 90%. Of course, so Manoj is again 98%. So I can tell you one thing which is very much guaranteed. So if you are able to see the weaker hands, right? So probably market profile is one of the best tool to visualize weaker hands. Forget the smart money. Can I spot smart money using market profile? Of course, I never digged into that topic too much, but the topic out of my curiosity, what I digged so far is that how we can track the weaker hands using the market profile. So throughout the places I had tracked, recorded, played those kind of opportunities using market profile, and that is my core expertise. It is in, like, most of my expertise is not in tracking on a daily basis where the smart money is. You know why I'm not doing that? Because on a daily basis we have FIIs and DIs data. FIIs are buying something and DIs are selling something. So how do you know that who is smart money, FIIs or DIs? Or should I really bother about them, right? FIIs and DIs? Because on a daily basis, FIIs and DIs, no matter what, they will show up. Maybe in the next 4 days, they may be not showing much because of the festival season probably. But majority of the times on a daily basis, they are doing some activity in the markets. Am I right or not? So probably last couple of days, FIIs has been buying like 4,000 crore, 2,000 crore, 3,000 crore, and DIs has been continuously selling. So somebody is buying and somebody is selling. Both are institutions. So why I should bother about it? They themselves, they are not bothered about it. Who is smart money? Because they know that whoever is having the money, they are going to move the markets. If you tomorrow you have the money, you are going to move the markets. Am I right or not? But if somebody who is taking trading decisions emotionally, maybe you can even think from your trading perspective itself. Imagine whenever you are taking an emotional bets in the markets, or whenever you had made bigger bets in the markets, and without any technical analysis, you're going and betting big. How many times you got punished? I don't want your answers here, but you just realize yourself, out of 10 times, how many times we went wrong. Now, I'm not interested in tracking an individual person as a dumb money. I'm not talking about any TV analyst or research analyst or any fundamental analyst or any technical analyst. I'm talking about market as a whole, as a group. There are many traders in the market. What they will do is that they follow X analyst, and sometime later they figure out that it's not going to work out. So they will start trading against them. They will think he's a dumb money. But of course, that is a wrong idea, I'll tell you. Okay. So once in a while, even a broken clock will be right twice in a day. So I'm not talking about those kind of people. I'm talking as a market as a whole, how we can track the dumb money. Not only the dumb money, any kind of money, what the traders are actually doing, how the market auction happens inside the markets. So that is what I'm talking about over here. So a couple of things you can track those dumb money. So using one as a stealth auction, another one is a weaker reference. And there is a failed auction is there. Failed auction is one form of weaker auctions in the markets. So when you know these three principles, probably you have a better idea about what is actually happening inside the markets. I mean, it gives a better perspective. As I said, it will not give you on a daily basis where the market will move. But at some point of time, you have the realization that, yes, the market is going to crash here. Or you can come up with a probability. The chances of market crashing in 1 or 2 days is going to be on the higher side. Or maybe the markets, whatever the drop we are having here, that drop is not an bigger, it's not a good drop. Basically, it's a weaker hand getting shaken out. Weaker hands are coming and shorting these markets. So I'm going to talk about failed auction. One more concept called multi-day breakout failure. So I'm going to explain what happened and how you can defend yourself when such things are happening, how you can take a precautionary measures. See, prediction is one thing. More than what is important is that not getting into a bad trades. Remember how many of the time most of the traders, they got stuck in a bad trade and they don't know when to get out, and finally they lost a fortune on top of that. Or even sometimes they know that it is one of the best trade, but still it is not going in your favor. In that case, you are struggling a lot and you are struggling to take a trading decision, or you are still started doubting about the methodology that you are practicing. So those kind of critical things are happening. When such kind of critical things are happening, how to take a best trading decisions. So that is where market profile helps you, not only from the prediction perspective, but also from the risk management perspective as well. So it will help you to adjust your thinking ability. So probably it will guide you to redefine your thinking process, and it helps you to think systematically. That's what it does. So there are times we don't know really market is what is happening inside the markets. We really don't know. So those are the times we will tend to stay away from those market situations. And then we'll keep waiting for the opportunity. If still not happening, we'll again keep waiting for the opportunity until the opportunity comes. All right, so let's get into the session here. So I'm going to talk about what is a failed auction and what is the importance of those failed auction, and what is my experience about failed auction in the last couple of years, because I've been watching failed auction since 2012-13 onwards. And failed auction, it never failed to surprise me. And we have a couple of rules on the failed auction as well. But today's session, what we are going to use here is that what is the importance of those failed auction and what is its winning rate when it comes to market profile analysis, how you can deal with such kind of analysis. That is what really we're going to talk about over here, and how we can capitalize those kind of trading opportunities. So in today's session, we'll go and discuss about failed auction. So I'm going to pull up my whiteboard here. So here is my whiteboard. So today what we're going to discuss, first thing is like we're going to discuss about a failed auction. Failed auction. See, failed auction is nothing but a IB breakout failure. Is anybody new to market profile here? If yes, please type yes, because last week we had discussed about the basics of what is the initial balance and what is value area and what is the importance of the point of control. All those things we discussed in the last week. It's nothing but a IB breakout failure. All right, so yeah, couple of people said they are very new to failed auctions. I mean, they are quite new to market profile. I guess if you are very new to market profile, please go and watch those last week video. So it is already there in the YouTube channel. So talking about failed auction, right? It is nothing but IB breakout failure. So if you ask me what is IB breakout failure, IB is nothing but first 1 hour high and low. That is, if you see the market profile, right? Every half an hour, a letter will get generated. So letter A and letter B, let's say. So that A and B period, it contributes to 1 hour range. So that first 1 hour range is what we called as a, so first 1 hour range, 1 hour range is what we called as the initial balance. Initial balance. So this is a very old concept. Probably you know about that open range breakout. So that is a kind of trading strategy. But basically, what is the meaning of the initial balance is that the first 1 hour of any markets are mostly dominated by the small traders and short-term traders. Basically, intraday traders are the first 1 hour. The moment market opens, they are the first one to get crowded in any kind of markets. Probably you would have seen when sweet is there, right? So immediately all the flies will be coming and getting crowded around the sweets. You would have seen that, right? Something like that. When the market opens, the very first minute, right from the very first minute, the first 1 hour, somehow the intraday traders will try to find a trade. And this behavior is very common among most of the markets, not only Nifty or not only Bank Nifty, but most of the pitch, whenever the pitch session is happening, most of the day time frame traders are the one who gets crowded more and more on a daily basis. So if you ask me, are they the only one to crowd? Not necessarily all the days, but most of the days, first 1 hour is crowded by the intraday traders. So that is the reason earlier people used to watch the first 1 hour breakout or first 15-minute breakout. So whenever it is breaking out, people think some smart money is coming and buying, right? So that is what people generally think, but we are not bothered about that old style of thinking. New way of thinking is completely different, right? So what the failed auction is that whenever you are seeing such kind of breakout failure, typically many intraday traders watch these levels. Okay, so many intraday traders, what they will do, they watch these levels, and you can also see a subtle pattern about such kind of patterns. Many times what happens here is that it will be used, these levels will be used for hunting their stop loss. So many traders, what they will do, they will keep their stop loss at, this is nothing but today's low. We call it as early morning low. Early morning low and early morning high. Not early morning high. It's better I'll use a different terminology. It's like instead I'll use the term IB low and IB high, because early morning low and early morning high is a different concept. I'm sorry for that. So it's IB low and IB high. Initial balance low and initial balance high. So typically this is also one form of an day time frame traders reference. Generally, sometimes what happens, the early morning low. So this is a first 30-minute high. First 30-minute low here. The first 30-minute low is one of the intraday reference. Sometimes what happens, price will be coming and just breaking those levels, maybe hardly by some 10 points or 15 points. Many times it would have broken, and it had pulled back, and then market went to the other side. Maybe if you want to visualize, right, I'll show you the last Thursday's activity, last Thursday expiry. Probably if you haven't seen it, I'll show you how things worked on last Friday. I'm going to show you the 1-minute charts. I'm going to show you the candlestick charts, the prediction behavior. This is a kind of repetitive trading behavior. You can see it on a frequent basis. All right. So let me go back, and I'm going to bring an AmiBroker tool over here. All right. I'm going to bring an AmiBroker tool. So I'm going to bring 1-minute time frame, 1M, so that you can have a fair idea what I am trying to say here. All right. So let me go and simulate last Friday's activity. 1 minute, and I want to bring a 25th. 24th is what I'm going to bring. 25th is Christmas. So let me play. See that market opened with a kind of a gap up, which is good. And it is an expiry day as well. So basically, market keep on rallying on one side. And finally, it stopped, and it started around 10 o'clock, right? It stopped roughly around, I think C period it stopped. C period means somewhere between 10:15 to 10:45 it got stopped. Until then, it's been keep on rallying on one side. Let me fast forward a bit so that I'll slow it down. Okay, here we go. So we got an excess over here, and from that excess, there was a kind of a small breakout failure. That is not a prediction placed, by the way. But at this point of time, I'm having an early morning low. This is early morning. Notice this point very carefully. I drawn a line at today's low, because many traders, either knowingly or unknowingly, they are watching these levels. When this level is broken, there are many traders in the markets who would like to trade the price-based, we can call them as a price-based breakout traders. They are mostly, many people in the markets are price-based breakout traders. So whenever a level is breaking out, they anticipate or they take emotional trading decisions there. So one such level is the early morning low. That is the first half an hour low. Letter A period low is what we call as a first 1 hour low. You see that momentum is getting generated. Price breaks down and it pulls back. So suddenly you see that the sharp downside followed by a sharp upside. That is one another thing. And that is an interesting phenomena that it is kind of a breakout failure. These kind of breakout failures keeps on happening in the markets time to time. So you see that how many times they went? Only twice they went. Probably I'll pass here. So this is again a place. So this is a place where it had formed a low, and that low got broken down. And basically these are the two places it had broken. Only two places we had broken on last Friday. So this is number one place where we had broken. Today's low got broken. And again, today's low got broken at one more location. Exactly at one more location here. So what happened here is that within half an hour, there was a breakout failure happened. And altogether, later on what happened is that price went to the other side. Generally, price goes to the other side. Whenever this kind of day low is broken and markets are not falling further, that is again a sign of a strength. So usually market goes to the other side to do the stop hunting. Usually the other side is like towards 13,750. From the intraday perspective itself, there are many places I had taken such kind of trades. So market gives you an ample amount of time to think and react. And sometimes these kind of bigger opportunity also happens in the markets. So let me play the auction here. So let me run it like 5 times speed. So more time is pending above the early morning low. So that is basically what happened over here. So basically what happened over here is some kind of cheating pattern is what they had made over here. Am I right or not? Some kind of cheating happened over here. Whoever attempting to play today's low, if it is getting broken down, or remember, many players, many traders in the markets, they don't play the today's high, today's low. Whenever the such levels are broken, they will not, the kind of players they play. But remember, most of the players stop loss, most of the time will be around today's low, or probably today's low from 7 points, today's low plus some 10 points, today's high plus 5 points. That is where most of the traders, they will be keeping their stop loss. Am I right or not? If you're not sure, next time you just go back and check out your trades, most of the time where you are keeping your trades. It is a common behavior that most of the intraday traders, they keep their trades around today's low, previous day low, 5-day low, 10-day low, right? That is where whenever the swing low or previous swing low. So most of the times it is highly predictable that where these players can go wrong and why they go wrong. And if they are going wrong, where the market can move and why it should move. All those things you will be able to get to know based upon the way the markets are auctioning. And the real art is not knowing where they are going wrong. How you can convert this information into a trading edge. That is where the real edge is there. So this is one place. If you are seeing, right, at least if you are seeing this, markets are not going beyond today's low. Twice the breakout failure happened around the today's low, and it turns out to be we call it as an IB breakout failure, initial balance breakout failure. So maybe if you're watching from the market profile perspective, you will be seeing something like this. This is what it happened on last Friday. Last Friday, from the market profile perspective, you know that, right? Every half an hour a letter gets generated. Letter A is from 9:15 to 9:45, and letter B is from 9:45 to 10:15, and so on. Every day it will be generating 13 letters. So at the E period, price had broken very strongly once, and again it tried to broken one more time. So that is where the initial balance low or the early morning low got broken. Twice it broken, but still it is able to maintain and got back. And rest of the day, what happens? It is a kind of a one-sided move. Price went on testing the day high. That particular day, the day high, earlier it was made around at C period. That C period high is where majority of the traders would have been kept their stop loss. So that particular day, intraday traders has been cheated. I mean, the intraday traders got cheated at the day low also. Then market went up, and then whoever shorted from there, many traders confirmation point is like when the day low, today's low is get broken, they go and trade. First 15-minute high is broken, they go and trade. First 15-minute low, if it is getting broken, they go and initiate trades. So those kind of traders would have been cheated terribly on those kind of days. Of course, market will not do the same cheating on a daily basis. So different day, different methodology is used to trap the weaker hands. But generally, you can see this is one place where you can go and where you can see the traders, they're getting into some form of a trap. Sometime back, right, you can able to see this is another day where the initial balance low failure again got happened on 16th of December. So 16th of December, there is again a failed auction sell. That means a failed auction, the initial balance, that is letter A and B period low got broken. Maybe I'll split this profile activity here. Oops. Somehow I'm not able to split. All right, forgot. So this particular day on 16th of December, if you see, maybe I'll show you the activity on 16th of December as well. So maybe that could be bringing you a better idea about what I'm talking over here. I'll go to AmiBroker because AmiBroker, you can visualize the candlestick charts. A better place to visualize the candlestick charts, and you can run faster bar replay as well. I'll go and select 16th and let me run the bar replay here. I'm going to run 5 times faster. So this particular day, there was an market was forming an IB low. IB low get confirmed around 10:15. IB low gets confirmed. So let me pass here so that this is the place the IB low got a confirmation. Okay. This is a place, the IB low got a confirmation. You see how it is, that place is getting cheated, okay? All right, so basically this is one of my reference point. It is not my entry point, it is not my exit point or something like that, but generally I'll be checking whether at these level anybody is coming and getting trapped or not. So I'll be keeping a monitoring around those levels, right? So when I say I'm monitoring those levels, I'll be watching those levels. If something like this, you see how it happens. What I'm showing you is an 1 minute chart. One of the candle broken those level and immediately got a pullback. So what is that low? First 1 hour low. First 16-minute low is where price had broken and market totally got a pullback around those levels, and that level never came at all. So in that case, you know that it is not a good place to, probably not a good place to short this market. Maybe a good idea to go long in those markets, even if you're a bit late in the market. Also, your focus should be aligned on thinking from the long perspective, so that because the win rate from the intraday perspective is pretty much higher, and generally the longs will be favored. So from an intraday trading perspective. So this is one another game. That is not the end at all. I'll show you one more biggest breakout failures. This is what we can call it as a biggest. Most of the big trade setups happen something like multi-day breakout failure. So multi-day breakout failure, maybe if you want to visualize, maybe it's better to go and visualize from a Harley time frame. Okay, Harley time frame. But those kinds of things I prefer to watch from a market profile perspective. So the recently market crashed, right? Whenever the market crashed, let me tell you, I'll go to daily time frame, something like this, so that you have a better idea about what I'm talking over here. So think about this particular day. There was a multi-day, there was a very big candle. That very big candle was going and taking the low of 4th of December. Maybe 4th of December or even 3rd of December also. I'm not sure about 3rd of December. Let me check. The 3rd of December low is around where? The 3rd of December low is 13,153. Right? So that particular day, what happened? 13,155. So this 3rd December low is not broken, but where it got broken? The 13th, 4th of December low got broken. 13,202 is the level which got broken. That level got broken. Okay, 4th December low, which is a multi-day low, got broken. But still, you see that it never closed below 4th December low. Probably if you would have done that, I would consider that as probably a strong selling. However, that is not a strong selling. According to me, it's a weaker hand got flushed out. Later on, I'll tell you why the weaker hand got flushed out. But it is a kind of a weaker hand flushed out. Even one of the Converge event, I said like there was a flush. Probably I was expecting some correction, but I never expected this kind of deeper correction. I was expecting something like around price going down to something like 13,360 kind of levels in one of the Converge event. But after seeing this information, I said like this is more of a weaker hand flush because it is again kind of a multi-day breakout failure. Because the breakout failure is one place where the traders get cheated again and again and again and again. And that is again a cautious place. If you are already shorting this market and after seeing this big candle, imagine how many traders they would have been getting into short. Those kind of people are not better than price-based traders. They are seeing this bigger price crash And they are thinking that, oh my God, this market is going to crash. But if you are having a subtle information about those failed trading places where majority of the weaker hands go and punch their trades, probably you have a predictability over there, because repeatedly weaker hands make a mistake again and again and again and again. And you know that is not a wise place to short the market. Maybe if you're shorted here, it's fine. But after seeing this big candle, if your signal is getting trigger a sell and you want to take it, then you are the weaker hand over here. Because the weaker hands, they never focus on the context. They focus only on price. By focusing on the price, they don't give importance to the context. Why you have to give importance to the context is that different cases, the context information differs. Probably sometimes it'll say like highly critical, high probability that market is going to crash because more and more weaker hands are getting long, or more and more weaker hands are getting more and more emotional. When you're seeing that kind of emotional point, that emotion has been released with a form of a market fall. We call that as an inventory correction. So some big inventory correction happened over there. That's it. Some old longs, they booked their profits. That's it. They just gone out. Now again, fresh buying started happening in the markets. Now think about for a minute, these kind of breakout failure can happen even in the weekly levels also. Let me go and show you the weekly levels as well. So last time such kind of multi-week breakout failure happened last week. Last week, if you see, 2-week low got broken out. You're able to see that? 2-week low. It got broken out. I'm just not even talking from the market profile perspective, but these are basic foundation for the market profile. They're not market profile, but these are basic foundation. These price actions are basic foundation for the market profile. Why I'm saying, you'll get to know that later on. But at this point of time, imagine these kind of simple price actions over here. This is the same price action. It happened even sometime back here also. This is one of the place where multi-week breakout failure happened. Look at this place over here. Multiple week. That means here on during this October 2020, what kind of low is getting broken? This multiple week low is getting broken over here. Maybe if you want to find an investing opportunity, right? These kind of multi-week breakout failure are one of the best possible chances. So here what is happening? Suddenly a multiple week breakout failure is happening. It is breaking how many week low? So basically 1, 2, 3, 4, 5, 6, 7, 8 weeks. 8-week low got broken out, and that week price manages to close above the multi-week low. So what is the multi-week low? Somewhere around 10,908. You see that if in case you missed any trading opportunity, this is again and best. I'm not talking about from a trading perspective. I'm talking from the investing perspective. This is even a best trading opportunity. Let me show you one such opportunity. Right now it is going on. It is in Lupin. I'm not sure how many of you seen Lupin, but I've been tracking for quite some time now. So if you see this kind of trade setup, last week, again, there was a multi-week breakout failure. Prior to that, this failure is also a multi-week breakout failure, probably this one. So this is the one we focused here, multiple week low. So here, you put a line over here. What you can see here is, let me put a line here. This is a multi-week low. Slightly a little bit above here. We already discussed many times in our upcoming sessions like about these kind of multi-week breakout failures. So those are the places your predictability pattern on going long is on the higher side. So basically, so this is one place there was a multiple week low. I'm not talking about previous week low breakout failures. I'm talking about 3 weeks breakout failure or 5 weeks breakout failure, 10 weeks breakout failure. So price was breaking that low and manages to close above those lows. That provides an immediate trading, investing opportunity on a weekly scale. Again, this is also, there was again a multi-week breakout failure. This time it is around this trading location. Probably again, if you could see, this is the weekly low. It got taken out. Okay, it got taken out in this candle on 14/11/2020. November 14th got taken out. but still it turns out to be a breakout failure. Here also, we looked for a long opportunity in Lupin over here. So basically multi-week breakout failure or even multi-month breakout failure. How many of you witnessed multi-month breakout failure? Let me tell you one biggest opportunity in Nifty here. I'll go to monthly. You're able to see where there was a multi-month breakout failure. I guess by looking into the chart itself, you can see where there was a multi-month breakout failure. Let me draw a line, maybe so that you can visualize those multi-month breakout failure. This particular level here, in one shot, it was breaking multiple month. So this is the coronavirus month. It was breaking that multi-month low. Of course, it had taken 2017 low. In one shot, it had taken down. Listen carefully what I'm saying. In one shot, it had taken down and it got pulled back on the multi-month low. Now, I'm not telling stories. These are the setups. I've been using this for quite some time. It is good from a trading perspective also. It is good from an investing perspective also, where your prediction skills are likely to be on the higher side. You don't know which up to what level on the upper side is gonna go, but those are the lowest possible risky zones where your investing risk is going to be very, very less if you're watching from a daily, monthly, weekly candles or weekly or monthly candles. And your risk from the daily trading perspective, intraday trading perspective is also likely to be very, very lesser, especially such kind of places. Repeatedly, traders get cheated, investors get cheated, right? Around those levels, because investors watch different set of references, like monthly low, weekly low is what investors will be watching out. Whereas intraday traders, they'll be watching a different set of levels. Intraday traders and positional traders, they don't watch these kind of multi-month low or multi-week low. They will be watching a completely different set of trading informations. So again, there is a multi-month breakout failure over here. You know what is the impact of those things? The information, what you are gathering is much better than any other trader. It is one of the better investing zones. Better now or never. That is the kind of information that you can grab from here. Again, previously there was again a similar information over here. This is again and one more multi-month breakout failure happened during the month of when exactly? This is a month we are having the multi-month breakout failure. And again, this month is again a breakout failure month. So this particular month. And likewise, this particular month also a breakout failure month. So like this, if you go back and keep on checking out, most of the monthly breakouts, you can go and invest as early as than anybody else, I would say. If you're using technical analysis indicators, yeah, there are chances are there that it could be, you might be entering late, but these kind of very simple breakout failure models, your predictability ratio is very high. More than that, your risk reward is also ultra low here. All right. So one of my favorite places. So basically, I had categorized into multiple breakout failures, and I've been studying these breakout failures for a very longer period. Because all these days, right, when I'm trading system, I've been a trend follower. I was really curious to know like how you can trade in a mean reversion mode, exactly when the markets are falling, exactly when to go and take a long, exactly when the markets are rising rapidly. What are the trade locations where you should look for a mean reversion? So honestly speaking, it is very difficult to predict using indicators. Probably it is better to apply our market experience. So I would say, like, if you want to trade any mean reversion strategy, better you have a trading experience and better you have a screen time experience as well. Because without that, blindly going and approaching a mean reversion game is ultra risky and it is a deadly game. And if you are even not maintaining your discipline, you will be shaken out very easily. And very frequently, the trader has to go bankrupt and then refilling again, coming and backing and trading. So that kind of cycle, most likely, most of the traders would be put themselves into that kind of mode. So that is not a good idea. So if in case if you are trading any mean reversion strategy, all I would recommend is you can go and do some sort of a screen time experience. Try try to classify yourself, which one is good, which one is bad. That kind of classification, right? That is what the machine learning does, right? We humans are what? We learn ourselves. Over a period of time, all these years, we know which is good, which is bad in our life, right? The same thing applies with the market as well. So you need to know which patterns are really good and which patterns are highly working good. What is the probability of those patterns, and why to trade such kind of patterns? You need to have a strong classification. Without having this classification, if it is not working out, you simply dump it and then you move on to the next one. That is how a discretionary trader learns from their experience, and they keep moving forward. I'm not saying like you should keep on changing indicator once in a while. I'm saying like you have to prioritize your trade setup and not move. And more than that, what is the frequency of the trade setup? You should learn to know about the frequency of the trade setup. Now, there are some trading patterns, right, which occurs once in a blue moon, but it gives a tremendous trading opportunities. But there are many opportunities which will be available in the market, which will be like 1:1 or 1:1.5 kind of risk reward ratio. That kind of trading risk reward ratio. Let's say you want to be a daily trader, then you cannot say like I will trade only 1:10 or 1:20 kind of risk reward ratio, or at least 1:4 kind of risk reward ratio. Because when you are looking for a 1:4 or 1:10 kind of risk reward ratio, what you will be finding is that the frequency of the trade goes down a lot, right? And that is not easy, and you have to wait for a longer time to catch such kind of fish. So such kind of things exist in the market, but it is not that easy to go and get those low risk, extremely low risk and high reward kind of trade setups. Or probably you need to have a lot of skill to learn such kind of things, right? So it doesn't happen on a day one itself. You learn something and you are trying to implement something, and you are trying to catch that 1:5 or 1:10 kind of risk reward ratio from the day one onwards. If you ask me, is that possible? Chances are going to be very less. You need a lot of screen time. You need a lot of screen time practice and experience over here. And yeah, so basically, that is what we are also providing in our Option Hydra session. So we are kick-starting our Option Hydra session coming Jan 2021 onwards, especially for the option traders who want to learn market profile. We are doing an kind of an 85 plus hours of mentoring program on market profile. We are also giving the basic knowledge of options as well. So if you are really curious to know about it, you can go and check out in optionhydra.com. So it is an, kind of an mentoring program, especially for the traders who are option traders and who also want to know about market profile and order flow. So basically, almost 95 plus hours of live courses. Live sessions will be conducted where you'll be given a live idea about how to deal with these kind of market situations, how to decode those market informations, and when to predict and when not to predict, when to go with the flow. And those kind of when a trader can make mistakes and how you can correct it yourself. That kind of professional advice will be there. Especially, of course, we also talk about here and there if opportunity is striking during live markets. We also talk about those such kind of trading opportunities as well. So what we will be focusing is we'll be focusing on 40 hours of live training. That is 20 days. 1 hour in the morning and 1 hour in the afternoon, especially on two major topics. One on options trading, especially we will be covering both directional as well as non-directional trade setups. And along with that, we are also going to focus on market profile, especially how to use market profile and how we can convert those information to take option trading strategies. So that is what we're going to focus over here. And of course, you can go and check out the complete syllabus over here, right? So we divided into two parts, especially Option Hydra Basic. Option Hydra Basic is for the traders who are very new to options and especially who want to learn option strategies. And then we are having Option Hydra Advanced Syllabus, where especially if you're a trader and you want to learn market profile and how to apply those market profile skills using option strategies. So we will be using market profile to understand what is happening inside the markets. And then later on, we'll be using option trading to control our risk. So there are certain places at times the risk reward ratio, we can control it using the option strategies. If in case we want to go for an 1:1 risk reward ratio, or 1:2 or 1:3, so those kind of strategies can be designed using the option strategies. So if you're really interested, you can go and check out at optionhydra.com, and the session starts from 2nd of Jan onwards. All right. So let me do one thing. Let's go back to the topic and we'll discuss about the topic over here. So we are discussing about the tools, whatever the tools, what I'm using here is like NinjaTrader and Bell TPO. So NinjaTrader is more of an kind of an free tool. Basically, you can download from ninjatrader.com. You can go and get all the complex indicators. And of course, I'm using Bell Market Profile. It's a third-party tool especially designed for NinjaTrader 8 users. And using this tool, you can go and check the market profile and various trading levels, like some of the most important trading levels. Those are the levels is what I'm going to discuss over here, which happened recently. So for example, recently at the current market scenario, right, what happened here is that last Friday there was a failed auction. So basically, what is a failed auction? Let me explain one more time. A failed auction is nothing but an IB breakout failure. So basically an IB breakout failure is what? It's a first 1 hour high and low. Let me draw this 1 hour high and low. Oops. Let me draw this. Say this is first 1 hour high and first 1 hour low. This is IB high and IB low. Okay, IB low. So market does this IB high and IB low. All of a sudden, mid of the day, what happened? This low got broken down and then it came back and the price went to the other side. So basically what is happening here is an IB breakout failure. IB breakout failure. This IB breakout failure, you can trade intraday also. From an intraday perspective, it is more of an IB breakout failure. So you can go and expect price to hit the, what we can expect here is a kind of a stop hunting is what we can expect. Stop hunting. So this is the prediction that you can make on that particular day. Prediction. This is more of an intraday prediction that price, whenever there's IB breakout failure is happening, there are very higher chances are there that price can go and make an kind of an it can go and trigger the stops. It goes and trigger the stops because most of the weaker hands, they have the habit of keeping their stops at a day high. Not everybody keeps their stops exactly at day high. Some people, they keep the stops at day high plus 2 points, at day high plus 5 points. So those are the kind of prediction. So more than prediction, we can say like it is most of the time it is a low risk, high reward kind of trade setup. In a month, at least you can expect some 2 such kind of trade setups in Nifty and Bank Nifty. Such kind of setups you can expect very frequently in the markets. And that too, when the crowd is getting more and more, we can say like when the crowd is getting more and more into some sort of a gambling mode, a speculative mode. These kind of failed auctions are repeatedly likely to happen. This month itself, it happened 3 times, and all 3 times it had provided a tremendous trading opportunity. So this is failed auction, and another importance of the failed auction is that this level, the IB breakout failure level. So basically, I'll put in a different color. This IB breakout failure level. Generally, it has the odds of revisiting back in T plus 5 days. T plus 5 days, and that probability is like as close as like 75%. For example, recently there was a failed auction. Let me go and show you the failed auction levels over here. So 16th December, there was a failed auction, and followed by the failed auction, we have what? We have one more up trading day, and followed by that, we also have a type 2 stealth auction. So generally, I have a classification like which is good, which is bad. Likewise, we have a type 1 stealth auction and type 2 stealth auction. So what happened on 18th December is a type 2 stealth auction. Kind of an emotional day, kind of more and more emotional traders are coming and competing. It's more of an what? Emotional buyers. Emotional buyers. They keep on coming and competing. So whenever such kind of emotional activity is happening, usually you can expect what? Near to that, you can expect some liquidation, some profit booking you can expect most of the time. Sometimes it can be a even serious correction also can happen around stealth auction. That is a kind of a warning sign that, hey, you should be cautious on your long opportunity. So that is also one form of prediction, but you really not sure about the timing, either on next day or probably one more subsequent day. You can expect some correction, but anytime you should be prepared to attempt that kind of correction in the markets. So that is one thing you need to know about that. So that after the stealth auction, what happened here is that a strong liquidation happened and that cleared the failed auction. So basically the failed auction started on 16th December. The 16th December low is failed auction. And after that, we have day one, nothing happened. Day two is a stealth auction. Day one, this is day one, and this is day two. And third day, it came down and cleared the failed auction. This is the one of the level which I was expecting. And we also spoken in the Converge, like it is, my comment is like this level, right? It is not only a failed auction, it is a failed auction from market profile perspective, but it is also, we call it as an unsecure low, okay? Unsecure low from the order flow analysis perspective. So both are indicating that the chances are a bit higher that this is going to happen. But what I failed to predict here, let me also tell you that I never expected this kind of deeper crash. I was expecting price to come back to 13,620, maybe a little bit higher force, but I never imagined that particular day we will be going for a bigger crash, like almost that particular day market crashed close to close 600 points or 600, 650 points from the intraday perspective, right? That is one of the biggest correction we had seen in the recent times, where the market crashed almost 500, 600, more than 500, 600 points, and it cleared many levels in one shot. But even that, it was breaking one of the key important level. It was breaking one of the prominent point of control, and it is rejecting back. That is an indication that this correction is not at all a serious correction. This is more of an, it triggered an profit booking, and that profit booking brought a lot of emotional traders. What it brought here is that it brought many emotional traders into the markets. It brought what? Lot more emotional traders. How do I know that these are emotional traders? The way the price action is happening, the way the breakout failure is happening, the way multi-day breakout failure is happening. All these are indications that we are dealing with emotional traders who are attempting to do a fresh shot, and that is what institutional investors, they like those fresh meats. They go and eat those fresh meats, and they would like to have traders like basically a trader. There are many traders, they try to correlate with the events. So one of the day, like coronavirus crisis was happening and all the global markets are tanking, our markets also tanked. And but if you ask me, is it a good auction or is it a bad auction? It is a good auction from an intraday perspective, but it is a bad auction from a positional trading perspective. I would say like that. It is a good selling because selling was anticipated, but at the same time, the selling is not a strong selling because it turns out to be a multi-day breakout failure. That means it is not a good selling at all. So those are the places you have to maintain a stance. Like unless this level is going to get broken, I'm not going to take a fresh shots. That is the approach we follow in most of our training sessions. We don't even short whenever there's such kind of multi-day breakout failure is happening, especially it is happening with a strong breakout failure levels. Usually we tend to stay away from taking fresh shots. I'm okay to take a fresh shots, but I want confirmation that whenever this 13,200 levels are breaking, if it is not breaking, then you should have the mindset to quickly change from short opportunity towards a long opportunity. Anytime you should come up with a prepared mindset. Unless you are not prepared for that mindset, what happens, you know? You are biased with the shorts and you're biased with the price. You glue to the price, and every price rise, you will tend to short these markets because you thought so, because that big downtrend in the markets naturally should follow more downtrend, right? That is what most of the traders thinking is. They extrapolate things. Of course, at least in market profile, you should not extrapolate things. You should understand how to play this opportunity, how to play this trading environment. It is a different trading environment. Now, right now, if you look into the markets, you could see after the stealth auction, what else we are seeing right now? I'm not, all these are post-mortem things, but if you ask me to go and check the markets right now, you could be able to see a couple of things here. There is one failed auction. It has been running for T1, two days back. There was a failed auction. That is on 22nd December. There was a failed auction. 24th December, again, there was one more failed auction is there. That is last Friday. Okay. So right now, I'm considering a couple of important levels here when it comes to Nifty. So this high over here, this high is not a stronger high because we call that as a weaker high. We already discussed about what is a weaker high, what is a poor high, what is the importance of those things. It is already there in the YouTube. You can go back and check it out. So basically, it is a weaker high. Means it is not a strong high at all. Means I'm not that bearish for this week. But at the same time, I'm also mildly bearish. Okay, so I mean, I'm just thinking that this high is not a good high. This high has to be cleared out. Basically, this high I'm talking about. This high over here. Probably I'll put in a different color. So probably this high over here, it is not a good high. That is what we call it. If it is not a good high, we call it as a weaker high. Means it is not a strong high at all. The chances of this high breaking is very, very higher. And at the same time, we are also having a failed auction sell. So means I'm also expecting the chances of price touching this failed auction is very, very higher. Okay. So basically, I'm not expecting any top. I'm not expecting any bottom immediately. But I'm just thinking that maybe these two levels, this low and this low over here and this high over here, both are likely to be broken in the next 1 week. So in that case, how you will prepare yourself? Using option trades, how you can prepare? Maybe you can prepare for some sort of an option spreads. You can prepare for some sort of a bear spreads. You can prepare for, so that your risk also get controlled and your you will get a decent, reasonable trading opportunity. Of course, not a extraordinary trading opportunity as such, but a reasonable trading opportunity for the next 1 week, because I'm not expecting a major crash in the markets yet. But yes, that can be some small minor pullback I'm expecting towards 11,640. But at the same time, I'm also not sure whether this will happen first at this point of time, since there are weaker highs also there. The lower reference is also weaker. Maybe I'm expecting either something like this or probably something like this is what I'm expecting. Maybe an immediate drop, and then the drop can go as low as there's one more weaker level over here. We call that as a weaker point of control, which is around 11,750 levels. Maybe the drop can go as low as like something like this, and it can rise back. Most likely, this is the one opportunity I'm just expecting, which can happen in an immediate short term. I'm expecting some immediate crashes in the markets, and followed by that a very good pullback, again going and hitting an all-time high. So that is the kind of setup I've been expecting in these markets in the next couple of weeks. So this is based upon the context right now, what is happening and what kind of information. I'm just looking into the informations like the failed auction over here. See, let's see what are the information I'm just looking out here. I'm just looking into the this failed auction information. I'm just looking into this weaker point of control information. That is point number 2. I'm also looking into this weaker high reference level. So the one of the reference level, like this high is exactly very close to the 21 December high, just only one tick shy. And that high we call it as a weaker high. So that is point number 3 I'm expecting. So if the point number 3 is getting broken out, then this is not a major top. So that is again an information that this is not a top yet. Not a top yet. So we have to wait for the market to top out, but this is not a market top at all. If this high, the last Friday high, is going to be a weaker high, so means you should come up with these markets with a controlled thinking, and you within that limit, within that controlled limit, you can go and predict those markets as. So that is the nature of the market itself. More of the time, you have to come up with those controlled thinking, and that helps you to solve most of the problems that you're facing in the markets. And that also gives you a flexibility to change your opinion very frequently in the markets. All right, so this is one thing which I've been looking out for. And yeah, the worst case is like basically either this or probably something like this is what we can expect. But basically the game is not over yet on the upside. But at the same time, you also need to check the higher time frame as well, what the higher time frame itself they are doing. That is where we go and do the top down analysis. If you're looking from the top down analysis, I'll prefer watching the charts from monthly. So monthly trend is clearly up. There is no sign of exhaustion yet. It's been still going on. Last month also again went up. This month also again we're going up. And weekly, if you are checking weekly, what we are getting over here is like we are seeing an kind of a multi-week breakout failure again. No fresh shots unless this low got broken. So that is again a warning sign not to take bigger shorting positions in the market unless this level are getting breached, that last week low. And yeah, if you want to short, you have to trade within those limits only. So I'm not saying like you should not trade shorts at all. What I'm saying here is if you want to trade shorts, you have to come up still with a limited thinking. Controlled thinking is what it is required. And yeah, still upside is still open to unlimited zones. We don't know how far we can go. And the short-term trend is clearly up. Last 4 days, prices keep on making higher lows. So basically it keep on rallying in the last 3-4 days. But still we got stuck in a band. So this is the band I've been talking about. So maybe this is the band we could be trading for this entire week as well. This week also we are likely to trade in this band itself, and most likely kind of some sort of a crazy action in this zone is what I'm just expecting for the next week going forward. So I'm not there is chances are there that some pullbacks can happen, but what are the pullbacks are coming in? It can be rallied back up again, but still market will be kept inside this controlled balance because market has been not balancing for a longer time. Last time market went into a balance is like around this zone. So this is a zone. Until then, market has been started its one-way price action. Market started rallying like a one-way price action over here. Clear trend emerged. And maybe the chances are higher that markets are likely to rotate around 13,200 to 13,800 kind of levels for the next week. And most likely on the downside, something like 13,000. What is the level we are talking about? We've been talking about from the order flow. That is where the order flow comes into the picture. So you have a fair idea that higher time frame can get into a range bound mode. And the important levels are like 13,360 levels and 13,000, roughly around this point of control. We call it as a weaker point of control. It's one of the weaker point of control. Exactly around 13,540 on the downside is a more important level to consider. Any downside targets, I could be targeting 13,550 levels. And yes, any upside level, I would consider this level as a weaker one. So more odds that next week it has the odds of coming and breaking out. So if you're seeing any dip opportunity, you can consider looking for a long towards these levels. That is what I would be thinking at this point of time. At the same time, I'm also having a control thinking. I'm not thinking at this point of time beyond 13,800. And at this point of time on the downside, I'm not thinking beyond 13,550 levels. So my thinking for the Monday and Tuesday market is going to be within this limit. And if something is changing, we have to recognize that change and then we have to go and act accordingly. But at this point of time, my thinking is like we're going to experience some sort of a quick drop in the market followed by a quick uptrend towards 13,800 kind of levels. So that is what the weaker reference levels is all about. So the stealth auction, as I said, the type 2 stealth auction. Type 2 stealth auction is kind of a price action setup. Like it's kind of a drop and followed by that price again does an intraday drop, goes up. Again, it does an intraday drop and then it keeps going up. So finally, after the market doing this kind of price action, right? So it does this kind of price action. It attempts to fall 3 times or 4 times, and finally it rallied from the intraday perspective. So this is kind of one form of an emotional trade setups. So basically, those kind of days you have to be really cautious. There are many times, after 1 or 2 days later, after 1 day later, the market could be doing something called inventory adjustment. So you have to be really cautious about on those particular days. Or the other thing is that there are many extreme cases market also starts correcting the next day also immediately. So 1 or 2 days here and there, you have to be very cautious about that. And whenever things are joining, you should join the party. And at the same time, you should also have the habit of booking the profitability at that right time, because you know that when things are getting more and more emotional and you're seeing a lot of traps around those levels, it is a better idea to trade the opportunity and exit and wait for the next opportunity. If you really don't know what is happening after that, you're seeing an opportunity, you traded the opportunity, and later on you don't know what is happening, the better way is to wait for the trade setup to happen. And yes, this is again a kind of a type 2 stealth auction. As I said, we have been exploring on various kind of stealth auction. This is one stealth auction that we cannot miss out, where emotional traders are coming for a buying, kind of laggards are coming for a buying here. Most likely it brings an very, very short-term trading opportunities on the short side basically. But this is like kind of an unimaginable thing. Like I was expecting something like a crash towards 13,620 levels, but what market had done is like kind of an and even towards 13,000 some 440 levels or something. But I never imagined like market can go down deeper as like 13,150 kind of levels. Again, this is weaker reference. I've been talking about this weaker high as well. So this is high is also not so good high. Last Thursday high is not a good high, and this level also having a higher odds of taking out in this next week itself. So I've been watching out for those levels. And yeah, there is a G2 high at an all-time high, but there are higher chances are there that this G2 high can get violated next week because of this weaker high references. So that is one thing which I'm not concerned about this G2 high at all at this point of time. But I'm aware that the G2 high is still there, which at this point of time, I'm not considering as much of an important reference. Maybe at the later stage of the time, this G2 high, if it is not getting cleared, maybe it could have a greater significance. So at this point of time, I'm not considering this G2 high as much of a bigger reference. But maybe next week, if it is not getting cleared, then the G2 high can be served as a major and important reference as well. So these are the three things I would like to talk about that. I hope, let me brief what we had seen so far. We had seen a couple of trading setups over here. So first of all, we discussed about what? We discussed about IB breakout failure. IB. Let's discuss what are the things we had discussed so far. Okay, just a summary of what we had discussed so far. So we discussed about IB breakout failure, which is nothing but a failed auction. Most of the breakout failure, you're able to see dumb money coming and competing. Dumb money coming and competing. And not only that, dumb investing money also. This is basically dumb trading money. Dumb trading money. We also learned one more thing, like there are a couple of breakout failures, especially you can call those breakout failure as multi-day breakout failure, This is where most of the positional traders, dumb positional traders, they come and dumb positional traders, they get trapped most of the time. And so there is again, we discussed about multi-week and multi-month breakout failures. Basically, those are the places dumb investors, they come and get trapped. They'll be liquidating their portfolio. So especially around multi-week and multi-month breakout. I'm not talking about breakout, but actually breakout failure. Okay, breakout failure. This is the place where dumb investors liquidate their portfolio. Most of the emotional investors, they liquidate their portfolio, whereas multi-day breakout failure, who gets trapped most of the time? Dumb positional traders, they think this is going to be a serious correction and they get into some form of a price-based trap. So basically these are traps, but analyzing these traps, you will be getting more and more detailed insight, which I'll be sharing in the Option Hydra section, because we are having an exclusive session on breakout failures. So what is my experience on the breakout failure, how to trade those breakout failure, where to keep a stop loss, or if you're using option trades, if you are a spread trader, what kind of spreads you have to take and when you should take. So those kind of information will be explained in the Option Hydra session. So if in case, if you are considering, then option Hydra 2.0, all I can guarantee you is an institutional grade technical analysis program is what I can guarantee you. And yes, we will be discussing about a lot more interesting trading ideas as well. All right, so let me take a couple of questions here before signing out for the day. If in case, so there's a big question is there. Galaxy S6 Edge, his question is like, let me pull out this question here. It's a very wrong, I mean, very bigger question as well. I'll try to answer it live first of all. Is the opening time of letter A of the daily profile session the same day as the first hour for the day? Not necessarily, right? So early letter A period low, I primarily called as an early morning low. However, A period low can be broken by B period as well. Still, it can be an IB low can get formed. So A period low, not necessarily should be the first trading hour for the day. It can be broken also, right? So second question is like, is the open time of A period of daily profile session a different time in all countries? No, when the market starts, the first half an hour from the market start is the A period. See, basically different software uses different logic. Even in this case, like, let me go and show you. If in case if I want to change to the different letter, I can put a different letter. But it's a standard practice I'm following over here. Letter A is always first half an hour, because I know if I see the yellow color green period, I know that we are at 11:30 something. That's the time which is running in. So we are at that E period. So we are something like GH. We know that it is the mid of the day period. L and M, we are in the last 45 minutes of the session. So I have a identification by looking into the letters. What I'm going to sense, I'm going to sense only what at what time the breakout happened. When I say the E period is getting broken, means somewhere around 12 o'clock or 12:30 is what the breakdown happened around those levels. So that information I'll be able to gather from those levels. So I know the timings, at what time the cheating happened, right? At what time the stop hunting happened. When I say J period, I'm able to visualize, I'm able to connect with the time. Okay, somewhere around 2 o'clock or 2:15, that upside breakout happened. The day high got taken out at around 2:15. So I have a strong idea about not only about the price action, but also about the time as well. So time is one thing. Majority of the traders, they don't give not much of an importance to the time. Many traders, they give more importance to price, but very few people, they give more importance to the time. So if you want to study the time based behavior as well, market profile is one tool that you cannot miss it out, right? So here, using market profile gives you idea about price, volume, and time, how it is interconnected. So those kind of ideas you will be able to gather from these market profile. So basically, it is a skill that a trader should know, so that they can understand what is actually happening inside the markets. And that is highly necessary if you want to go for such kind of predictions in the markets. All right. So let me move on to the next question. He's also having a question like, would it be good if just to use market profile charts for my trade analysis and entries and disregard candlestick analysis? So that differs from traders to traders. Some people, they want to use market profile as a supportive tool for the existing studies, which is well and good. Some people, they want to use market profile as a standalone. It is well and good. So I would say, like, initially, if you are a beginner, right, you should straight away, you cannot jump into the market profile, because you will feel that it is not objective. So until you get a framework, right? When I say framework, the framework is the one thing that can give you the objectivity. As long as you are not having that objectivity yet, you are still trying to discover, you're in the discovering mode, how market profile works, whether market profile is for me or not. If you are in that discovery process, I would still suggest you not to use market profile as a standalone tool, but you can use as a supportive tool with your existing studies. However, once you're getting matured, as the day is getting progressed, it's still better to use market profile as a standalone tool. Maybe it is not from an initial perspective. Initial perspective, you can combine with your studies along with market profile. But over a period of time, yes, market profile can be used as a standalone tool. So that is my comment over there. Can Wyckoff cycles can be seen on market profile charts, or Wyckoff cycle can be seen on VSA chart? So let me tell you, I'm not an VSA expert, and we are not bothered about Wyckoff cycle because definitely we are doing a top-down analysis, and we are bothered about the immediate trend, what is the immediate trend is doing, and we are bothered about what the long-term time frame is doing. So I'm not either an expert in Wyckoff studies. I'm sure about the Wyckoff cycles, the accumulation, markup, markdown phase. But really, it is not connected to the short-term trading. Today's trading, right? If you are going and trading on Monday, probably or Tuesday, those are higher time frame studies. I don't even need to bother about what is happening, whether accumulation or distribution is happening. Definitely, it's going to happen. That is how the institution works in the markets. But from an intraday trading perspective, or from a very short-term perspective, for the next 5 days or 3 days of trading, I don't need to bother about whether the markets are, whether the accumulation is happening or distribution is happening. Because on a daily basis, accumulation and distribution happens. That is what the FIs and DIs, they do, right? That is what they do. That is their job, to do the accumulation and distribution. Their job to do that markup and markdown. So there is no point of doing that, because if somebody is accumulating from the markets, right? So somebody is also selling in the markets. Of course, that doesn't, if you are seeing an accumulation phase or an distribution phase, right? Maybe it is connected for the investors. If you are an investor, yes, you should worry about that. But if you're a trader, do you really worry about that? If you ask me, not necessarily. You can just move on. You can just pass on the information. You can focus on the short-term trading information, right? So there are places you have to think like an trader, that you have to do it at most of the places, because you are the trader. If you're an investor, yes, definitely you should worry about what the smart money is doing, what FIs are doing, what DIs are doing, what is the fundamental ratio. PE ratio is 37. Oh my God, I'm going to freak out. So those kind of things, you can think about that. However, if you're a short-term trader, you don't need to bother about where the PE ratio is. You don't need to bother about what the USDNR is doing. You don't need to freak out on even most of the time. You don't need to freak out when events like demonetization is happening, or some bad election announcements are happening, or some bad events are happening, or even positive announcements are happening, positive election results are happening. You don't need to freak out, because whenever such time you are freaking out, then we are none other than better than weaker hand traders. We are as good as weaker hand traders. So freaking out, the moment you are freaking out, definitely investors, especially institutional investors, will be taking advantage as a crowd. So generally they want somebody to freak out. That is where they are able to get their supplies. Somebody has to be on the opposite side, right? If everybody is freaking out, somebody should be there on the opposite side to come and trade. So that is what institutional investors, they come and trade around there. So basically, dumb money is nothing but they are the one who comes and trade against the smart money. So ideally, it should be somebody who, if you want to be on the other side, you need to know what dumb money is doing, right? So, and their prediction, the behavior of dumb money is quite interesting, because it is a predictable behavior. And over a period of time, if you are using market profile, you'll be able to appreciate that concepts. Let me move on to the next question here. Oops, the question is lengthier, but it's very difficult to explain. I mean, it's been going on and on and on. If in case if you're having lengthy question, please shoot a mail to me. So Saravanan is asking, multi-day low for 30-minute chart. Can we consider 1 week low or 2 days low? So it can be sometimes 2 days low. It can be 5 days low. It can be at times even 14 days low also. So anything more than 1 day low, it is getting broken out. We can call it as a multi-day low. All right. What is WPOC? WPOC is like weaker point of control. Okay, what is the cost of the software for quarterly? That is a question from Anand. I think he's asking about the Bell TPO product. So basically, you can go and check it out from traderscart.in, or you can also get it from belltpo.com. So these are the two places you can find the Bell TPO software tools. And there's also a question from how to know whether it is successful breakout or a breakout failure exactly. See, that I would say like that comes with experience. As I said, whenever we are talking about a mean reversion trading behavior, right, it is good to have an observation. Without having an observation, you cannot say whether it's a successful breakout or a breakout failure, because every time the scenario differs. If it is a trend following, right, it is easy to do, and you don't need much of an experience. However, that is not the same case with mean reversion trading. If you want to trade against a trend, especially if you are identifying a breakout failure, basically, right? So not every breakout failure we are going to go and take a trade over there. For example, there is also a breakout failure happened around these levels. There is a failed auction happened around those levels. I'm not even considering for a test towards those failed auction levels. This I'm just giving an skip. So probably the chances are very, very less by now. Am I expecting another 500 points fall for the next week? Of course, not yet, at least not at this point of time. But I'm just expecting at least this level to get cleared for the next week. So something around testing 13,650 level. That if you ask me, that is possible. Yes, that is possible. If you are expecting this is W weaker point of control, if this is possible, I can say boldly that this is also possible with slightly higher chances. And yeah, that is how it is. Like, I don't even consider that will I expect the price to revisit up towards this level. I'm not expecting this because we are in the expiry season, and generally the expiry season, right? Market won't get that volatile towards 13,200 kind of levels. So I just keep my bearishness to a limited perspective up to 13,550 levels on the downside. That is a maximum downside one can expect at this point of time, which is still an 200 points down from the current trading levels. One can go and take some decent risk reward ratio trade setups using option strategies. All right, so let me stop the session here. Probably next week we're going to discuss into a different concept, basically on how to use TradingView kind of platforms and TradingView and Excel sheet, how you can send automated orders. So we thought of discussing a little bit on the automation perspective in Febinars. And there is one more interesting announcement in Febinars is pending. So stay tuned for this new year. A very interesting announcement is pending from Febinars perspective. And thanks for being committed, coming and attending sessions on every Saturday and Sundays. Like most likely we used to do sessions on Saturdays. We'll be talking about one interesting concepts about the markets. It could be about market profile, or it could be about order flow, it could be about options or automated trading, AMI broker tools, or TradingView kind of tools. So more and more users been keep on coming and attending. So hats off to you, and thanks for showing your support and trust and your love. And hopefully we'll be able to deliver more and more interesting topics about the markets and trading ideas and strategies and whatnot, about the trading tools and everything you need to know about the markets, the real experience which you can gather from the Febinars. And thanks for coming by once again. I'll signing off for the day. And thank you once again. And as usual, the session will be posted to our YouTube channel, and you'll be able to see the recorded session. Probably by tonight, you'll be able to see the recorded session. Thank you once again.